Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's take a look at some of the stocks on the move. I'm Paul Sweeney alongside Isabel Lee, one of my companies I used to cover, the Walt Disney Company, Mickey Mouse. They reported some numbers, better than expected numbers. So, of course, the stock's down. So the Walt Disney Company reported better than expected third quarter earnings with continued growth at its parks and streaming business, overshadowing a tough climate for movies and traditional TV. Let's break it down with Geetha Ranganathan. She covers all the media stuff for Bloomberg Intelligence. Geetha, it seemed to me like on the surface a pretty good quarter for Disney. What's the street a little concerned about?
Yeah, really good quarter for Disney, Paul. The beat and raise for sure. Expectations might have been, slightly high, and the fact that they didn't necessarily give us any specific guidance for fiscal 2026, they did point to a raised guidance for EPS growth for fiscal 2025, 18% now instead of 16%, but they didn't necessarily give us anything specific for fiscal 2026. That could be a slight source of disappointment. Other than that, the only other thing that I think might be causing this reaction is that they did say that they will stop disclosing Disney Plus subscriber numbers. But again, this is not something totally unexpected. I mean, Netflix has stopped doing this. We're seeing this kind of move away from just subscriber numbers to a greater focus on profitability.
I want to zero in on parks because I'm still scarred by how expensive it was when I visited a couple of years ago as an adult. But how sustainable is their strong parks performance given the divergent domestic and international performance?
Very sustainable, Isabel. So, we saw domestic parks, and I say that because, domestic parks actually coming into this quarter, there were a lot of worries. One, of course, about the general macroeconomic environment, but the bigger source of worry was really the opening of Epic Universe, which is, Universal's big Florida theme park attraction. But the fact that it had absolutely no impact at all, or very, very modest impact, if at all, is really amazing. And it just kind of speaks to the resilience in Disney's business model. They reported, again, very, very strong per capita growth, in terms of food and beverages, in terms of concessions. So all of that doing really well. And the reason I'm so positive about this business going forward, first of all, it contributes about 55 to 60% of Disney's profits. So really, really important to their top line, to their bottom line, definitely. They have a lot of upcoming capacity. So the biggest source of expansion over the next few months is really going to be their cruise ships. They're launching 2 new cruise ships, their biggest ever, actually, which is going to come on board in November and December. One of them sets sail from Asia, and that basically takes the number of cruise ships to 8 cruise ships, effectively kind of doubling their capacity in a span of just maybe 2 to 3 years. So that is going to really buoy, both top line and bottom line going into 2026. And then beyond that, you really have this huge $60 billion capital expansion plan that is really going to play out over the next 5 to 10 years. So we're going to see a lot more attractions all over the world. We're going to see that new Abu Dhabi park come out. So there is really a lot of, sustained momentum that we can expect at the parks going forward.
Geetha, talk to us about that deal they just made with the NFL. It seems like a really positive development for the company.
Yeah, it's really good, I think, from a Disney, from an ESPN standpoint, that they're so closely aligned now with the NFL. I mean, the NFL is absolutely the premium property, the gold standard, Paul. You know this well when it comes to, sports properties in the U.S. And the fact now that they're going to be able to use all of this content for their upcoming ESPN streaming launch, I mean, that itself just kind of gives it a tremendous boost, I think, even before, it comes on board. So it's great for the product. It's also great from a strategic standpoint because the NFL is obviously one of the most important sports properties, and this really gives them access, or it at least definitely gives them a little bit of an advantageous position compared to, let's say, an Amazon or a Netflix or an Apple if they want to ever outbid, the current media partners. So definitely, I think a strategically very, very sound move on the part of Disney.
So it seems like we had a good quarter. Runway for growth is really just long and wide. What downside risks remain then, especially around the macro uncertainty and tariff exposure, do you see?
Yeah, maybe a little bit of execution risk. So we still really don't know how this whole, obviously everybody's very excited for the ESPN product launch. but we still don't know how exactly that's going to play out. Again, a huge source of upside is going to be the streaming business. Everybody's expecting huge cost savings when it comes to the integration of Hulu and Disney Plus. But again, execution is a little bit of a risk. And then you pointed out, macro factors. Remember, Disney still obviously has huge exposure because of its parks business. And anytime we see kind of a slowdown in the economy, we do feel that in the parks as well. And of course, advertising also. So, they do have a substantial exposure to advertising because of their TV networks business. So there again, we can see a little bit of an impact. But overall, as it stands right now, the business seems to be in really good shape.
All right. Here, the problem childs, though, are the broadcast networks and the cable networks. Just because of cord cutting, they're just declining businesses. What's the company saying about what they're going to do with those businesses?
They haven't said anything explicitly, Paul. So a few years ago, this idea was floated that maybe they kind of spin off ABC, their broadcast network. Maybe they spin off their linear cable channels. All of that, noise has kind of quietened down. Bob Iger basically said, no, we need these businesses. They're all kind of integral to the whole Disney story. So we haven't heard anything recently. That being said, just this whole deal with the NFL kind of taking an equity stake, it almost seems like they are prepping for ESPN and maybe ABC to kind of go solo. Remember, Bob Iger only has a few more months left. So at the end of 2026, he leaves Disney. Or at least that's what he says. We think. And I really think he kind of wants to get this deal done. So to separate ESPN, because it's not really core to the rest of the Disney properties. But again, it's a little bit of a wait and watch, but nothing explicitly, stated from Disney management about what they want to do with the linear piece of the business.
So ESPN is getting a fresh spin with an August 21 launch. It will be $30 a month for the new streaming app. What do you make of that price? You think people will pay up for it, or is that steep?
It's a high price point. There's no doubt about it. I think most people were kind of expecting somewhere in the $23 to $25 range. That said, we just ran a survey actually at Bloomberg Intelligence, and what we found is that there's actually a lot of interest in this product. So we think that the uptake will be fairly strong, and the uptake not so much as a standalone product, but when you bundle it with Disney Plus and Hulu. So they are running a pretty attractive promotion. So for the first year, you can get Disney Plus, Hulu, and ESPN. At a $30 price point, which seems like really good value. So I think we're going to see a lot of people come in initially through the bundles, at least.
All right, great stuff. As always, Geetha, thank you so much for chatting with us. Geetha Ranganathan, she's the media analyst at Bloomberg Intelligence, covering all those fun companies in the media space. And Disney, again, pretty good quarter, maybe not quite up to expectations at Mickey Mouse.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.